let's also welcome Mr. Nitin Raheja of Julius Baer Wealth Advisors joining us on the show. And hi, good afternoon. Nitin, also give us a sense of where you are seeing the markets headed right now. So much at play. You have the tariff overhang, earnings, sector churn. So much is happening. Now that we have, for now at least, crossed that 25,000 mark, do you believe that after the little bit of consolidation that we've been seeing for the past couple of months, now the Nifty could break out and now maybe we're looking at better days ahead? Could you please unmute yourself, Nitin?
Okay, sorry.
No problem.
So if you really go by the quarter one earnings numbers that have come so far, it doesn't seem so. It does look a little challenging for the Nifty to break out, at least in the short term, from the band that it has got into, because I think the first quarter earnings are probably going to be the most challenging as we go ahead, and I think this recovery is going to be more back-ended. I mean, I just heard on your news channel about the government contemplating on uh, increased government spending. I think that's clearly a sign that the government is worried that growth is faltering. All supply side measures in the form of liquidity in the economy, lower interest rates, tax cuts that have happened are all having a back-ended effect. So I think the government wants to front load that through spending, which is what we are seeing. So I think Q1 is going to be challenging, and in that sense, it's going to be a little more challenging for the Nifty to break out, given the valuations at which it trades.
Point taken, Nitin. Hi, good afternoon. This is Shrishti also joining in. But Nitin, for the past couple of months, rather, the big theme that everybody was literally latching on was the financials. And this time, help us understand that how are you looking at the numbers, because we have the numbers coming in from the heavyweights, HDFC Bank, ICICI Bank, though not a great set, but markets are finding some resilience, while the mid and smaller banking names, they haven't performed as per the mark. What is that you are looking within the financials? Any particular space that is looking good to you?
So when you look at the financials overall as a sector, right? So in a scenario where liquidity is ample and you've had this front loading of interest rate cuts that happen, there's naturally going to be a compression in margins. However, the ability of big banks to absorb some of that and yet have levers within themselves to be able to sort of overcome that short-term margin compression is far better. And we've seen the larger two banks, private banks that have declared numbers, they've actually been well received by the markets, and they've been sort of very positive numbers as such. Some of the mid-tier banks will, in the next 2 quarters, see the impact of this margin compression take place. Having said that, if this is a front loading of cuts, the next year we should see banks do well, because on a credit on a low base, that is sort of followed through by the fact that as credit offtake will pick up, as well as the compression and margins will be behind, we should see earnings growth come, and the valuation at which some of these banks trade is interesting. The other element is the capital market players. I think that continues to be a space which is seeing resilient flows. So whether it's the asset management companies or companies who provide services in the capital markets, that's another space which is doing well. In the intermittent, I think NBFCs are the initial beneficiaries of the rate cut, and they should show good numbers over the next couple of quarters. So I think as a space, it looks very interesting. The space has done well in the last 6 months. It's been one of the best performing sectors, and I believe have reason to believe it should continue to do well.
Nitin, that's your take on the financial space entirely. But I know it's difficult to predict what's going to happen once the tariff announcement is out, but the market seems to be finding some hope of resilience, even though we still have that entire tariff overhang play on our markets right now. What's your take on what could happen? Where do you see the tariff deal going? Not on a speculation basis, but what could be the outcome and which sectors could be very adversely affected?
So right now, I think the markets are more hoping that the taco trade plays off once again, as it has done so in the last few months. Uh, But at a larger level, if you look at the whole tariff trade impact, it's been widely put at anywhere, with the exports to the US being close to 1.8% of overall exports. The total impact is expected to be, somewhere between 0.15 to 0.2% on GDP if it were to form, at the previous trials. But I think it's going to be more likely much lower. So I think the tariff news and what happens is probably going to be a moment where markets whose valuations are in fair and in certain pockets, high zone, we'll see those uh, areas and stocks correct much more compared to other pockets of the market. So I think it will be a buying opportunity if you ask me.
All right, that's the take coming in on tariff. But Nitin, apart from select sectors that we have just talked about, help us understand that are there any pockets where you believe that the valuations are still reasonable, or if one should not expect a very great sort of a return from these levels, but can start accumulating in select pockets?
Look, I think overall, if you look at the market, except for financials where valuations are, very, very fair and in good territory, most of the market, if you take whether it's the consumption plays, which is the largest chunk of plays, or even if you take capital goods or infrastructure plays, they're all very well priced. However, since liquidity flows in the markets have been so robust, as well as the fact that in the short term, I believe infrastructure and capex is what is going to drive over the next 6 months. If you ask me, it's going to be consumption, which is going to be the next leg of story, because I do believe post the festival season taking place with a good monsoon behind us, we should see a revival of the consumption story into play. But are they cheap? Answer is no. In fact, the scope for disappointment is very high out there if there is a disappointment in terms of earnings growth.
All right, so those are the select pockets that one can really look out for. But amidst this, the markets are moving higher because we are indeed at the day's highest point for Nifty as well as Nifty Bank as well, which has now surged more than 650 points as we speak right now. Select counters continue to do well, but within the autos, stocks like M&M, they have been actually breaking the range for themselves and inching higher. And selectively, Aditya, if I can have your take on M&M specifically, because of late the autos are taking a bit light when it comes to the stock movement, but M&M has been an outperformer and we are seeing that the stock is once again on the up move. Anything in particular that you are looking with respect to this counter, Aditya?
Absolutely, Srishti. In fact, this is one of the recommendations also from my end. Stock is into a fresh all-time high territory, a fresh breakout from a trendline resistance. And if anything, after the launch of Tesla and the pricing that they have started with, I think there's nothing negative for the stock M&M, and which is why it's broken out into an all-time high territory as well. One can initiate a fresh long position in M&M at current levels. Look for a target of 3360 on the upside with a stop loss on the downside at 3180. I think Mahindra is one stock which can be bought, held in the portfolio, not only for trading perspective, but also from an investment perspective, though one can still buy it from a trading perspective as well.
All right, so that's the take coming in on M&M, but on the bottom of your screen, you also have the numbers coming in from Eternal, wherein specifically if you that the profit figure is just 25 crores is what the company has reported, and indeed a sharp fall from those highest point is what we are seeing on the stock coming in. So that's it on Eternal. The profit figure is definitely taking the stock actually a bit lower, but we will watch out for more internals right now, and the stock is getting volatile a bit as we speak. But along with that, the other pocket that is actually doing well and a bit of a bounce back is what we are getting to see on the life insurance counters. And once again, these stocks are on the up move. Select financials have been doing well, and within the IT pack, it's Persistent Systems that is actually higher by almost 4% as we speak right now, given the fact that all these IT measures, they haven't been doing that well. And within the metals as well, we are seeing the stocks are shining bright. Case in point being Nalco. JSW Steel did come out with the numbers. Hindalco and Tata Steel, they continue to do well. Nitin, what's your overall sense on the metal pack? Because of late, these stocks have been doing well, and back home, we have seen all those safeguard duties also kicking in. The companies are now talking about it, and they are hopeful that maybe in the couple of quarters, the pricing can actually come back, and they can manage actually to take some bit of a price hikes. Anything on metals that you are liking at this point in time, and how do you see this overall space?
So, metals is a space which is probably tactically poised to do well in the short term. It's actually already done well in the last quarter, but it's tactically probably going to declare good positive numbers in this current quarter. And that's led by a very low base effect as far as pricing is concerned, and also new capacity going on stream. For us, we like to play this more through a value-added products or structural steel, where essentially you are playing the steel demand, but essentially you're relying on conversion margins coupled with volume growth to drive earnings. So we like more of the structural steel players or converters in that segment, where we are not hostage to steel prices.
Okay, let's address numbers coming in from Eternal. We have some more details coming in on the numbers right now. If you take a look at numbers on a year-on-year basis, consolidated revenue is surprising. A very positive number on revenue coming at 7167 crores. We were expecting this number to come around 6624 crores on 8.2% uptick versus our expectations, and 70.4% higher on a year-on-year basis. So big beat, but that's all the positivity that we can see as of now from the P&L statement for Zomato, because everything else is a miss versus our estimates. Net profit has come in at just 25 crores compared to our expectations of 105 crores. So big miss over there. It's down 90% on a year-on-year basis compared to 253 crores this time last year. It's largely expenses like advertisement expenses, food and delivery charges. You have other expenses that have inched up almost double on a year-on-year basis. That has weighed on the profitability quite some bit. If you take a look at the EBITDA number, that's come in at 115 crores, which is down 35% on a year-on-year basis. Once again, a miss versus our estimates of 179 crores, and for the margin also we were expecting 2.7%. The number has come in at just 1.6%, a whole of a percent lower than what we were expecting, in a 260 bips cut on a year-on-year basis. So once again, a miss coming in on the EBITDA margin front as well. What we understand from our first look at the documents, they are going to be incorporating a wholly owned subsidiary known as Blinkit Foods Limited with a share capital of 1 crore rupees, and it is going to be a wholly owned subsidiary. Once it is incorporated, it belongs to the food services category, and it is engaged in the business of providing food services. So that's something new that we are seeing this time around coming in for Blinkit. Of course, once the letter to the shareholders is out, we'll have some better idea about the segmental performance in terms of food delivery, where we were expecting an 18% GMV and a revenue growth. For Blinkit, we were expecting very strong GMV growth as well. So let's see what those numbers look like. We'll have those in a short while from now. But that's the first take on Zomato. I just want to see what the stock of Eternal is doing right now, because while the revenue is a beat against our expectations, you have all sorts of other expenses that have weighed on profitability right now. In fact, the stock is higher. So seems like the street is only focusing on the revenue number for now. We'll have the final print on the segmental performance in a bit, Shrishti, but till then we'll just see what the stock has to do.
Well, yes, 5% uptick is what we are seeing on Zomato, and that's really interesting to see that the company has incorporated a wholly owned subsidiary called Blinkit Foods right now. Nitin, on the QSR space, any take that you're getting to understand, because yes, Eternal will be a bit of a volatile counter for now, but any reading on the numbers and your overall take on this particular space, because the companies are no more just a food delivery platform. They have expanded into delivery platforms as well, and now a faster food delivery is what they are targeting. How do you see this space expanding, because it has already got a lot of investor interest indeed?
Well, if you go anecdotally from experience that each one of us has, it's only going up in terms of individual ordering that everyone is doing. So I think the whole QSR space will grow. The key question will come in terms of the competitive intensity in the space. I think currently that space is seeing an enhanced level of competition. The hope really is that, and there is a lot of burn that is happening. the hope is that ultimately in all of these businesses, there are only 2 or 3 players who are left. And there is a hope that the existing listed players will be in that top 2, 3 bucket. And when that would happen, the ability of these players to price their products better is going to, create a huge manifold growth that will happen in profitability on the size that they operate at. So over the long term, we are quite positive on this space.
That's the take coming in on the QSR space. But for now, even after just that 25 crores of profit number, Zomato is holding strong and now 6% jump is what we are getting to see. But yes, the letter from the management itself is awaited, because every time they come out with a very interesting commentary over there. But meanwhile, let's shift focus to the textile space then, because India is actively exploring the new markets for textile exports, aiming to capitalize on potential shifts in the global supply chains due to higher US tariffs on Bangladeshi garment imports. Sources tell ET now that the Indian government is aggressively pursuing new markets, like a big focus is on Japan for its textile and garment sectors. My colleague Samir is here with more details on this. Samir.
Indian government is constantly pushing for the new markets to increase the export basket for the textile industry, and in the same direction, Indian textile minister along with the industry representative met with the Japanese counterparts on 16th of July. What we are picking up from our sources that talks were held with the important Japanese player, whether it be Uniqlo, Pegasus, YKK and similar other prominent name. So from Indian side, they actually pitched with the strength that Indian textile industry has. For example, these are the Indian textile players. They are environmental and social compliant. They can actually match to the Japanese requirement when it comes to the size part. So that alterations or the customization can be achieved. Moreover, that assurance has also been given that if required, then the certain quality parameters can also be achieved, or it can match up to that level. So that sort of assurance was given. Moreover, Indian textile industry has also mentioned that they have got a couple of refined cotton, for example, Kasturi cotton, which can actually meet up to Japanese requirement as well. So that's a very important discussion held, because Indian government understand that there is a golden opportunity to increase the textile export basket to up to $20 to $35 billion. But if you see, there is a significant gap. As of now, India exported to Japan textile worth around $235 million, whereas for financial year 2024, Japan imported textile globally of around $35 billion. So there is a significant market that India can actually tap, and that is the reason that now India is constantly pushing to Japan and other countries as well, so that they can actually explore these markets and enhance the export basket as well.
All right, thank you so much, Sami, for getting us all those details. But Nitin, just wanted to have your quick take on textile as a space, because though we have been waiting by to what happens between India and US, but with respect to our neighboring nations, the kind of sectors that India can really stand a chance to win, be it textile, be it some of the other sectors within the pharma space, or even automotive as a division. Do you believe in any of these stories, and what's your overall take within these smaller pockets? Where can one find value?
Look, I think India really has a great opportunity to participate in this whole manufacturing outsourcing story. Okay, and I think textiles is a sector where we actually grow cotton, so we have the raw material and we have the whole value chain with us. So in different aspects, whether it's textiles, whether it's electronics today, or whether it's defense, because focusing on our engineering skills, there is a great opportunity. And I think we will grab a piece of that action for sure, given the focused effort that is going on. I think the key challenges when we talk to most industry people is the regulatory overhang that exists for manufacturing and the amount of compliances that go, which don't make manufacturing necessarily easy in India. Having said that, I do believe that there is a great opportunity to be a part of the global supply chain. I think we will do much better. I firmly believe our potential is far more than where we are getting to. But yes, I think in textiles is a sector where it's a great opportunity for India, given all the challenges that our neighbors are facing. And the diversification of supply chain to garner more market share.
All right, Nitin, interesting take over there, but thank you so much for taking the time out and speaking with us today. But other